I think we've come to an agreement here that it doesn't really make much sense for the US to do it, and it certainly doesn't make sense for the US to just haphazardly add these other coins in there. I don't know. Do you think? I mean, they're probably going to add even more coins. Now that you've opened the blockade.
Hi everyone, welcome to Bits and Bips, exploring how crypto and macro collide 1 basis point at a time. This week, Trump's announcement of a strategic crypto reserve sent markets surging, only to retrace almost all the gains Monday. Still, not everyone's convinced. Bitcoin maxis and even mainstream crypto voices have pushed back, arguing that only BTC, Bitcoin, belongs in a reserve. We'll dig into why Trump made this move and what the real allocation could look like. The White House is set to hold a major crypto roundtable this Friday. We'll discuss what to expect and how it could shape the administration's approach going forward. On the macro side, tariffs are back on the table. Equities tanked, plus the 10-year yield is dropped below its lowest level since December, signaling economic slowdown. We'll break down what all this means for markets. Also on the geopolitical front, you're living under lock. There was a huge shakeup in the Oval Office this week between Trump and Zelensky. Zelensky has basically rejected calls for an immediate ceasefire after a rough White House visit, basically saying he doesn't want to do this without some sort of safety measures, security guarantees. How does this impact global stability and the broader risk trade? But before we dive into all that, some quick intros. I'm your host, James Seyffart, TradFi Archmaester, Lord of Bloomberg's End, here with Noelle Acheson, High Seer and Keeper of the Crypto is Macro Now newsletter.
Hello, everyone.
Today, we're joined by Steve Howe, the Index Warden of Bloomberg's Realm.
No.
And Stephen Ehrlich, High Scribe of the Unchained Kingdom.
Hi, everybody.
We're here to discuss the latest stories in the worlds of crypto and macro. Just remember that nothing we say here is investment advice. Please check unchainedcrypto.com/bitsandbits for more disclosures.
I'd like to introduce you to Rock Wallet. This is a digital wallet that puts your crypto under your control. Using Rock Wallet is quick, easy, and secure. Visit rockwallet.com/welcome/unchained for an exclusive welcome offer for Unchained listeners. Crypto moves fast. It's why Bitwise launched the weekly CIO Memo, a jargon-free summary of what's moving crypto markets, written by one of the best in the business, CIO Matt Hogan. Get up to speed in 5 minutes or less. Check it out at bitwiseinvestments.com/CIO memo. Carefully consider the extreme risks associated with crypto before investing.
All right. News of the weekend, news of anything that matters for the most of the listener of this podcast. Trump basically said crypto markets rallying like crazy this weekend, basically putting out a tweet saying that he was going to put XRP, Solana, ADA, aka Cardano, to be in a crypto reserve. Unanimously across the board in the crypto ecosystem, this was not received well, aside from some people at Ripple and a few other small things. But usually a lot of the opinion leaders really didn't like this. I mean, I can pull up a whole bunch of tweets, but they include different people at mainstream crypto firms. You had a lot of key opinion leaders like Noelle, Brian Armstrong. You had the Winklevoss twins. Pretty much everyone saying this doesn't make a lot of sense. Steve, why don't you guys? We have two Steves here today. So Steve Howe is technically my colleague over at Bloomberg. We don't work too closely together, but we do talk a fair bit. So Steve Howe, why don't you give a little background on who you are, and then we can get into Trump's tweet and the crypto reserve.
Oh, sure. Thanks. Yeah, I'll be very brief. I'm a quant researcher at Bloomberg, specifically Bloomberg Indices. Many people don't know that Bloomberg, we have a business, a terminal business. That's the information, our platform. But then we have the news business. We actually also have an index business. So I create mostly systematic equity strategies, but sometimes also multi-asset strategies, which then become, sort of investable indices. And I have various thoughts on macro and so on Twitter. So I'm happy to be in this conversation. So.
Yeah, Steve has a lot of thoughts on macro, and I often talk with him. We debate back and forth on different topics. But yeah, he's come up with a whole bunch of white papers. So he's doing real quant-like research on the back end here that is probably a little more in the weeds than we need to get to here. But he's written a lot of really interesting pieces. One of his more recent ones, he just dove into basically investment, strong levels of investment back into different forms of technology, reinvestment, capital investment from firms, and how you can use that to do investments and create indices on it, which we
have talk about that too.
Yeah. All right. Stephen Ehrlich, who's now at Unchained with Laura Shin. So Stephen, why don't you give us a little background on what you do at Unchained and what you did before?
Yeah. Hi everybody. And
great to join all of you guys here. As I like to say, long-time listener, first-time caller. I recently joined Unchained about a month ago as executive editor. I've admired Laura for a long time and was really excited about the opportunity to join her. People here listening, you may remember me as the director of research for digital assets at Forbes, a position that I held for about 5 years. I've been in crypto all the way back since 2013. I remember looking at my computer screen when Bitcoin was $100 and thought it would be better to pay off my student loans than invest. And probably my other claim to fame is that because I've been in the industry for so long, before all this, I was a senior intelligence officer for the U.S. Defense Department. So I was probably one of the, if not the first person to ever grace a crypto conference stage and say that I had to undergo a polygraph test. Fascinating. Absolutely fascinating, which will come in handy if we get into a little bit of the Ukraine and Zelensky type of stuff going on here. We won't dive too deep down that rabbit hole, but we'll touch upon it. All right, going back to what we were talking about with this crypto reserve. I mean, I have a few thoughts. My first thought is, one, I don't like this, like any semblance of this stuff happening by like just simply executive order. It doesn't sit right with me. I think there should be a vote of Congress, which obviously there will be on Cynthia Lummis's bill, which we can get into. The other thing, I tend to agree with most of the opinion leaders here. Like, I'm not even a huge fan of like a Bitcoin reserve. If Congress gets it through, then maybe I could understand it. But really, I'm not even a fan of that. But I'm really not a fan of like adding these other coins into a potential strategic reserve. Like, in my mind, at that point, like, why aren't you just, I can make the argument that the government should have a strategic reserve of like Apple shares and Meta shares and Microsoft shares. Like, you can kind of make the argument in my mind, like gold, it's the next digital store of value, things along those lines. These other coins, ETH, Solana, Cardano, XRP, it doesn't make a ton of sense to me, but maybe we'll hear more about it in the coming weeks. What are your guys' thoughts? Do you guys agree that it should be Bitcoin only? Do you guys understand where this is coming from? Let's go to you first, Noelle.
I would like to point out that Trump managed to do yesterday what no one else has managed to do, and that is unite crypto enthusiasts and skeptics in agreement for the first time. It was epic. I am against the idea of a Bitcoin strategic reserve. It makes absolutely no sense. And I say that as someone who has been a lifelong Bitcoin enthusiast, well, lifelong for Bitcoin's life. Basically, it makes no sense for the United States. It makes no sense for Bitcoin. And I really doubt it's going to get very far in Congress, because can you imagine trying to explain to all the Congress, the representatives, why this is, and it's just not an advantage. There's huge political risk. There's huge economic risk as well. Should the United States send a signal that it does not have faith in the US dollar and it wants to build it up, support it with a store of value. What Trump did yesterday is totally bewildering. I have absolutely no idea why he would send that. It certainly felt like it wasn't vetted by anyone, because he didn't even mention Bitcoin and ETH in the first tweet. Surely anyone with half a brain would suggest that he do that. And then I was expecting to see today David Sachs tactfully trying to walk it back, but no, he toed the line and he came out in support of his boss's message yesterday, even though it was indeed very clumsy. It is clumsy. It reeks of corporate capture, and it is something that the crypto ecosystem, as you pointed out, James, is united in opposing, except for those that really, really want the price to go up.
Steve Howe, what are your thoughts? Like, this is a little bit out of your day job stuff, but I know you're a very opinionated person, so I'd love to hear what your thoughts are on this topic.
The thing is, I've been a pretty long time skeptic of crypto, but over time, I've become gradually persuaded, at least of its market value. And I think this whole pivot from its original thesis of crypto being a fully decentralized device towards one that's embracing and running towards ever more centralization from, Larry Fink, I guess, setting up Bitcoin ETFs and all the ETFs, crypto ETFs that would, talk about, like, that's very much TradFi, right? So now we have this idea of a strategic reserve, which I'm not really sure what a strategic, nature is. But one idea I've always had about this new era we're in a multipolar, world today, right? That's one thing that the Chinese foreign minister said at a Munich Security Conference, like we are at a watershed moment for the first time since the end of the Cold War, maybe even since end of World War II. Pax Americana is coming apart. In this universe, I can envision a world in which assets would take on ideological loyalties. Stocks certainly have loyalties to countries. Sovereign bonds have loyalties, but certain assets possibly do not have ideological loyalties, and that possibly include commodities and crypto. And now, if you now tell me that one of the camps is going to set up a strategic reserve, I don't know. I mean, I haven't really heard, the full rationale. But now, that being said, I tweeted yesterday that I thought, Bitcoin strategic reserve makes no sense, but it makes more sense than a strategic crypto reserve, which is Bitcoin plus a bunch of other, random coins that are not even necessarily limited supply. I think Solana is pretty much infinite supplied. So what are you exactly reserving? So anyway, I mean, yeah, it does remind me a lot of the policies that have come out of the Trump administration, which I guess Steve Ehrlich can chat about later. Like it feels a bit haphazard. It doesn't feel like something that's strategic is very well thought through. So anyway, that's what I think.
Stephen, I mean, is anybody here going to say they're a pro Bitcoin crypto reserve here?
Yeah, I mean, I had a few thoughts that came to mind. My first one was that when I saw this, I was going to laugh if this reserve is only like $10 million worth of these various tokens, so not a meaningful amount. Or like, is he somehow going to conflate his World Liberty Financial platform, which is accumulating various tokens, call that the reserve? But I mean, I would echo the points that everyone largely has made online about these tokens. I mean, I've written a couple of stories. I mean, a big one in Forbes last year in the magazine called Crypto's $1 Billion Zombies, which I basically defined what 20 L1s that had multi-billion-dollar valuations and what we said was little discernible use. We called them zombies because in the real world of finance, at some point, if you have a product that's not making any money, you'd have to take a down round, choke down an acquisition, go bankrupt. But these blockchains have just absolutely massive treasuries and low overhead. They could go on forever. That's the zombie. Ripple was actually the lead for that story, and Cardano was also in it. So I basically called them functional zombies in that story. And then just a couple of weeks ago, I mean, James, I interviewed you for this story talking about the upcoming ETFs for and Ripple and XRP. Two of them. Solana's also in there, but I think we kind of see Solana as a little bit different because it does have a thriving ecosystem. I mean, if you're trying to pick out like which tokens are going to stand the test of time for years, which I guess is theoretically what a reserve is supposed to be, I can't imagine XRP and Cardano making any sense because I just don't see a lot of people building on them. I don't see they don't generate much money, and I guess my assertion is that they're largely continuing to exist because they have charismatic founders, very involved communities of token holders that are loud on Twitter, and they have enough money to buy favor with the administration.
Another thing worth bringing up, totally agree with what you said there, Steve, and they also have very active marketing teams. But another thing worth bringing up is the timing of the post yesterday. It was on a Sunday, which generally has thinner liquidity. So it's generally not the kind of time you'd want to drop a market moving post like that if you care about fairness, if you care about access. And who were the beneficiaries? The crypto natives, the crypto traders who were online on Sunday. All the mainstream retail investors who'd bought the ETF, all the institutions bought the ETF, they were stuck. And Eric Trump had the gall to tweet out late last night that, hey, this is a big win for the retail investor because only retail investors are on Sunday. And that's actually not true at all. Most of the volume probably came from the professionals who have all of the alerts set up. The retail traders are in the ETFs and they were totally left out. It was just bizarre.
So I am curious, given that we all seem to be, not that in favor, or at least sort of, of this concept. What do you think is going to be the long-term, implications of this thing? Because he didn't just come up with it, right? Before Trump had embraced this, what's her name, Cynthia, the
Lummis.
second, yes, and she and someone else had worked on establishing a strategic reserve for Bitcoin, which I guess has a bill in Congress, which now I guess has to incorporate these other random coins, or not. I don't know. I mean, what you guys are more closer to the crypto community. Like, what do you see this as the long-term implications?
I was reading a Bloomberg article this morning about, and again, if this is up to date, 24 state-level Bitcoin reserve bills have been presented. 4 have been voted on. None of them have made it through. And this is including the state of Wyoming, which arguably is the most pro-crypto state in the United States. So in answer to your question, Steve, the next steps would be to get the bill through. But even Cynthia Lummis today, the author of the bill, was saying it's going to be quite a while. She's already dampening expectations because I think even she realizes the political will is just not there.
Yeah, I mean, if you look at what's going on with this administration, they're trying to cut costs everywhere. They're cutting things left and right. They're firing people, offering payouts. We have DOGE, the Department of Government Efficiency, and then to kind of come out and say we're saving you tax dollars and then we're buying cryptocurrency with it. Like we've talked a lot on this podcast before the Trump election that there really wasn't a cohort of like an anti-crypto army like Elizabeth Warren talked about having. But like if you say you're doing all this, you're getting rid of people's jobs, you're saving all this money, and you're going out and buying crypto, that might actually create a sort of anti-crypto army. So I mean, specifically unilaterally, it's not very clear exactly what's going to happen here. Are they going to do this through Treasury, or are they going to do this like to say they're shoring up the dollar? Whereas Cynthia Lummis's bill would go through Congress, it'd be a lot more clear exactly how it works. So one, I don't even know exactly where these assets would sit. There's also like, is Ripple just potentially going to give them like some XRP? Like, is the government actually going to have to buy it at market prices? Or same with the Cardano? Like, I don't know exactly how they'll get this. So like, I think it's a hard sell to say like, we're going to go out and use your tax-paying dollars to buy crypto. For anything in crypto at all, particularly for things beyond Bitcoin, I would say. But maybe that's just me going. Go ahead, Stephen.
I'm sorry, I was just going to say, I mean, I think it would be horrible if the government actually goes out and buys XRP. I mean, Ripple has, I forget the exact numbers. I put them in the story last week. I mean, they have billions and billions of worth of XRP in their treasury that they could just hand over right now. I mean, they have so much more than they could possibly need for just like regular runway. And they're going to have, I don't know, something like 20 or 30 billion more coming to them through unlocks in the coming years. If they want, I mean, my sense is, and same thing with Cardano. I mean, the Cardano Foundation has a 9-figure treasury. I'm not familiar with what Solana's finances are, but my sense is that if those foundations or those companies really want to be included, I mean, Ripple gave $5 million to Trump's inauguration. Why couldn't they give him $100 million worth of XRP to put into this crypto time capsule, and let's just see what happens with it?
Yeah, another reason would be, why would they do that? What would be the advantage to the government for that? And is that even legal? Can you give that much to the government without some kind of accounting offset? Another thing is the possibility we mentioned earlier about maybe just they're conflating terms, and maybe Trump is conflating strategic reserve with stockpile. Stockpile would imply that they just hang on to what they already have seized through various enforcement actions, and everyone's in favor of that. We certainly don't necessarily need them selling. So why not just hang on to that? Maybe that's what he's talking about, but that doesn't answer the question as to why host that on a Sunday.
Yeah, I'm curious too. I mean, the stockpile, even if they hold it, is the government? I mean, I actually don't know the answer to this, but is the government the actual like beneficial owner of those tokens that they can choose what to do with, or are there victims to whatever crimes were committed to generate those proceeds that should get the money back, which is why the government might want to sell it? I don't know the answer to that.
I did look into this at one stage, and I was told it's on a case-by-case basis. It very much depends. Often, in many cases, there's not an obvious victim. Often the victims themselves don't necessarily want to come forward for some reason. And sometimes it's just too long ago. And sometimes there is. So it's on a case-by-case basis. But another issue is it turns out that the government doesn't actually know how much they have. They're not very good at their record keeping.
Can we actually envision a scenario in which this reserve is actually used for anything? I mean, a strategic petroleum reserve was recently used by the Biden administration to lower oil prices, and that was refilled, right? And arguably, there's a purpose to it, right? And he did lower oil prices. I don't know. What is the scenario in which, has anyone actually even spelled out that they will actually even deploy such reserve?
No, we're all bewildered.
Yeah. I mean, I know it's been floated about just paying off the national debt with it, but then again, you never sell your Bitcoin.
And also, how would that work?
Yeah, I don't know. The idea would be, I mean, if the government needs money, I mean, it could just print it. It's fiat money. I mean, they could just print as much money as they need, or they sell bonds. I mean, raise taxes. I don't know. I mean, if the idea is a reserve, but at this point, if the government ever does accumulate a sizable portion of Bitcoin, and I don't even think 19 billion counts, given how big Bitcoin is at this point. But I mean, a much bigger portion. I mean, can you imagine the sell pressure that would come if it ever turned out that the U.S. government was liquidating it for any reason? Because you're right, they wouldn't just do it to lower taxes or something. Ideally or theoretically, would have to be for something pretty significant.
Yeah, I'd make 2 points. Like the one, I think it's the Bitcoin Policy Institute. If I'm wrong on exactly which institute put this out there, they kind of suggested they could argue that this is they could use this as the exchange stabilization fund, which they use to theoretically, the Treasury could buy assets, whether that's other foreign currencies, dollars themselves, other things to basically stabilize the dollar market. So that's one way Trump could theoretically, potentially unilaterally do this and say it's part of the exchange stabilization fund under the Department of Treasury. Again, I'm not a huge fan of that. I think if we're going to do this, it needs to be through Congress, because like you guys were just talking about, what happens when, somebody who's part of Elizabeth Warren's anti-crypto army gets to the presidential role and decides they're going to, great, we bought a few $1 billion. Now we're going to market sell all of it on your head now that somebody else is in charge of the White House. It doesn't sit right with me. The other thing I would say that we haven't really pointed out here is the U.S. government already has a tremendous amount of exposure to this asset class. The reason a lot of the U.S. government, the tax receipts that the U.S. government gets, a lot of it is very financialized compared to most other countries because their stock market is so big, because of all these different financialization aspects of the U.S. economy. If Bitcoin goes up a lot and people sell it, you have to send 15% of those gains, 30% of those gains, depending on how, short-term, long-term capital gains. You're making income, whether you're doing DeFi yields. So and most of the holders of these assets sit in the U.S. for the most part. So the U.S. is already heavily exposed to this, and another thing I would say. So it's not like the U.S. government is just not going to benefit if this thing grows now, particularly because of what's happening.
James, you make a good point. Actually, I think it makes more sense for smaller non-U.S. countries to hold arguably a reserve, just as where they hold forex reserves, right? As part of the portfolio. Anyway, I think we've come to an agreement here that it doesn't really make much sense for the U.S. to do it, and it certainly doesn't make sense for the U.S. to just haphazardly add these other coins in there. I don't know. Do you think? I mean, they're probably going to add even more coins. Now that you've opened the floodgate.
Well, we have to get the Trump meme coin in there, definitely. And there's no way you can't have Doge. I mean,
that's why I called it a time capsule. Just throw everything in there. Do you guys remember that episode? I don't know if anyone watches Parks and Recreation, but there's an episode about a Pawnee time capsule, and basically the entire town hall went nuts, and I think they had to create 3 time capsules because people wanted everything from books to whatever. So yeah, at some point everyone gets included.
Yeah, I mean, you could argue maybe some of this is kind of throwing lost coins in some regard, potentially. It just sits there and promotes it, and it sits on the government balance sheet potentially, and whatever. But I mean, let's kind of in the same vein here. Let's go to the White House is having a crypto roundtable. Based on everything I've seen online, people speaking publicly, the key opinion leaders like we spoke about before, I have to imagine this roundtable is kind of going to come back at David Sachs and kind of say we're not a huge fan of this. We don't I think most people are we don't want what the Biden admin was doing, was just attacking left and right under the Gary Gensler administration. I think most people in crypto are like, just like give us rules of the road and let us build. We're kind of like, the pendulum has like swung too far to the other side, where it's like, we're going to buy all these altcoins and put them on the government balance sheet. So I'm curious to see, one, what do you guys think is going to happen at this crypto roundtable, if you have any thoughts at all? I'll start with you, Noelle.
Well, I imagine the CEO of Ripple is going to be there, and I would expect the co-founder of Cardano to probably be there also, if indeed they are the crypto influencers we're led to believe. But I agree with you. I mean, they're obviously going to be very in favor of the idea. It depends how forceful their arguments are and what David Sachs eventually decides to recommend. It's not just David Sachs, though. He's the chair. There's a pretty extensive working group of very experienced administrators. So I think we can assume that cooler heads will prevail, simply because this is just not something that any of the regulators and officials are going to want to spend political capital on, no matter how compelling the arguments presented by those with vested interests are.
If you asked everyone in crypto, I think, to create a wish list for what they wanted from the administration, I mean, it started with, I guess, pardoning Ross and getting the SEC to drop all the suits, and those kind of things have happened. But from the reporting that I've done and just like anecdotally talking to people, I mean, the reserve was something that they found interesting, but primarily if it was just focused on Bitcoin. And then two, they want legislation. As far as like what this working group meeting is going to be, I mean, I don't know how long it's going to be. Is it 2 hours? Is it a half a day thing? Are they going to have lunch? I don't know. But I would imagine that it's going to more details about this reserve are going to come out, because I am sure that the entire White House team is getting inundated with questions like the ones that we're talking about right here. As far as like things that create longer term sustainability for the industry, like progress on a stablecoin bill and a market structure bill, I don't know how much that's going to happen, because that stuff happens in Congress. It doesn't happen in the White House, and they're proceeding. I mean, I think we're going to get a stablecoin bill hopefully within the first 100 days of the administration. Market structure bill is far more complicated, so I would not be surprised if that doesn't happen until 2026. So I kind of expect that from the meeting, more details on this reserve or stockpile, whatever it is, and that perhaps kind of set an agenda for subsequent meetings or summits throughout the rest of the year.
So I would also say one of the other things that's come out of this, there's a lot of people like heavily critiquing David Sachs, saying he's biased here because he has a bunch of exposure. He was an early investor in Solana through his funds and directly, I believe. I don't know exactly what his exposure is, but he came out publicly and said, I've sold all of my crypto, and people are still upset because he has decent amount of exposure to Bitwise, who a friend of the show. We've had people on the show many times. They're very vocal in the space, and they're like, well, they own all these coins. And part of me is like, yeah, but we're talking about all the coins, like they're the largest tokens and cryptocurrencies around. It's not like they went and chose like some random tokens that were like, 47th on the world's largest. Like we're looking out here, you take out Tether, BNB, and USDC, and they're basically, it's just holding all the top largest coins, right? So Cardano's down at 8 right now if you go by market cap. Obviously, Steven spoke about before, some of these are more heavily used than others, but there's a lot of people that hold a lot of exposure to these things, and by market cap, these are the largest coins. So I'll defend a little bit there, David Sachs on that front, because, I mean, Bitwise is kind of like, the way I think about them, in the gold rush, they say, sell picks and shovels. And that's kind of what Bitwise is doing in my mind. So yeah, he has exposure to the space, but it's more just exposure to the space overall. And I don't think the only thing that's out here that's like excluded that theoretically could have been included is BNB. And we all know that's the Binance coin, kind of tied with China, Champagne Zhao, all these things. It kind of makes sense why the US government would not consider that potentially for a strategic reserve, which again, obviously everyone here isn't there. So I don't know if you guys have any thoughts there. Do you think it looks bad for David Sachs? Do you guys think it kind of makes sense? Noelle, you're shaking your head. What are your thoughts?
I think we should give him the benefit of the doubt here. He did sell his spot holdings. He does have exposure via Craft Ventures, but he's not in this for the money. He has plenty of it already. And what he is poised to do for the industry is potentially very positive. So I vote for giving him the benefit of the doubt.
I mean, my sense is, given some of the Trump meme coin and some of the questionable decisions that I think we're seeing from people in Washington, him having indirect exposure to basically a market cap weighted portfolio of crypto tokens is really not a big deal. And for an industry that's as esoteric as this, I mean, we kind of need people that have that level of sophistication. If he was exposed to all kinds of random meme coins and ones like way out on the spectrum, that would be more questionable. But I'm not so worried about that.
Yeah, I'm not so well informed on this aspect, But the only thing I'd be curious is whether or not he has actually spelled out any rationale behind any of the questions we've raised so far. Have we actually heard much from him?
Not yet. I don't think, unless anyone else has seen something I have. It's been kind of, what we've seen in tweets and public statements, which from my point of view is not very explanatory, aside from these are US based coins kind of thing.
What does it mean for crypto to be US based?
Founders are based here, I guess.
I'm assuming developed in the US, but this is also strange because Cardano was developed by a Hong Kong-based company. In fact, its developer is still known as IOHK. I know it's rebranded, but everyone calls it, even on its website, it's IOHK for Hong Kong. And the Cardano Foundation is based in Switzerland. So I'm not quite sure what the definitions are here.
And Solana Foundation is also in Switzerland, right? No,
I don't know that.
I don't know. I think that sounds right.
That at all.
And to clarify before I get yelled at, Cardano did relocate. The IOHK did relocate to, I think it was Wyoming. So they're no longer based in Hong Kong, but again, US based.
Yeah, and the founders of Solana are US guys, US persons too. And part of this kind of seems like, a lot of people were running and people seem to be coming back to the US. And I wonder if we didn't have such a hostile administration that we had over the last 4 to 8 years, because even the first Trump administration was not friendly to this space whatsoever. So I wonder how many things actually would have been founded here if it was not, quite as hostile as it was. Before we get to the ETFs, one thing that I wanted to bring up, I don't know if you guys have any thoughts. There was a statement from the SEC last week that basically stating what everyone kind of knew it was like this huge news on crypto Twitter and X that meme coins are non-securities. That's basically what the statement said. That's kind of how everyone was already operating in my mind. The SEC has done a lot of things. They've dropped a lot of cases that people thought they shouldn't have brought. They've provided a lot of clarity. I think this was just like really low-hanging fruit. This is kind of the way the SEC was operating. They were operating via enforcement, not giving any guidelines. And this thing that came out on February 27th basically said, yeah, these things are not securities. If they don't have utility, whatever, we're not going to consider them securities. They don't fall under the SEC. But they do caveat and basically say, if you do fraud and insider manipulation, like we can still go after you for using this, which is something we've talked about on the show before. To me, it's kind of like they're coming in after it seems like the meme coin has been like bubble has kind of completely deflated, and they're like, yeah, we're not going to go after this. And it's kind of ironic because part of what the prior SEC admin did was basically made any tokens that were made with utility, they were going after saying they were securities de facto without any conversation. So the one way that you could do things was like, we're going to launch a meme coin and the SEC won't go after us. And like the first real clear guidance we got from the SEC is, kind of what we already knew. I don't know if you guys have any further thoughts on this, or I'll go to you, Noelle.
I'll jump in with that and say I'm actually kind of surprised. Obviously, meme coins aren't securities because common effort, et cetera, but there is an argument to be made that if they're issued to make money, then they can be classified. And this is, the previous ACC tried to classify stablecoins as securities. So I'm surprised that they put that line in the sand, and especially so soon after the confusion regarding the Libra launch, which was a week ago, 2 weeks ago. Time doesn't mean anything anymore. And that was marketed as a meme coin, but really wasn't. So the takeaway from that episode was we need a definition. And I don't think anybody would be averse to the SEC at least putting some guardrails around disclosures behind meme coins. So I was surprised to see that announcement.
Yeah, I have a couple thoughts on that. I mean, I think they did try to define a type of meme coin a little bit in that statement. I mean, basically something that was issued, I think, for, I guess, like social value with like no promise of future development and no utility and no rights to future cash flows and so on and so forth. I don't think anybody here would disagree that those things are not securities. If a couple things, I guess two things I would think though. One, I almost wish that they put a little more text into that statement, just talking about how scammy meme coins are. I mean, we all got a couple of really good reminders from Melania and then from Libra, but I mean, you guys, I'm sure all know this. I mean, an ungodly amount of meme coins are sniped, and the token economics are even more disadvantageous than like ICOs back in the day when they were sold to institutions at well below market price. I mean, the chances of an ordinary person getting richer on meme coin is so small. I kind of wish some of those numbers would be in there. But two, like there's lots of meme coins that are not just as defined by that guidance. I mean, look at SHIP. I know that the team behind there is trying to build a blockchain, actually create a whole ecosystem and utility. At what point would that morph from?
Which one is this?
I mean, they're trying to create a whole blockchain. I know with Dogecoin, and I know those are not the same things as the pump.fund tokens, but with Dogecoin, I mean, there's been efforts to try to create additional utility and get usage behind them and so on and so forth. So, I mean, one thing I think people always need to remember is that the SEC, whenever they do something, it looks at very specific facts and circumstances, and those things can also change if teams behind certain meme coins decide that they don't want to just be there for fun, but they actually want to create something.
And also the Trump meme coin apparently can be used to pay for Trump merchandise on certain websites. So does that give it a utility, or does that even make it money-like? And so you're totally right, Stephen, in that further clarification around what meme coins should be, can be, will be, it would have been useful. I think the SEC was correct in putting out a statement saying, no, we're not going to, because there was a lot of speculation swirling around about the SEC marching in with their boots. But I agree with you. We need more information on that. And meme coin frenzy hopefully has died away, but people are people, and it's not gone away forever.
I actually ran a story last week on this. I mean, looking at some of the pump.fund numbers, we saw dramatic drop-offs in users and tokens graduating onto Radium. Ironically, the drop off for tokens being created was not quite as stark, because I guess they're still trying, but the supply is still kind of continuing a little bit apace, but the demand has certainly been affected by those recent tokens that we spoke about.
Yeah, it's too easy to launch these tokens. I mean, the one thing I would say is, one, I would love to see like the SEC bring suit against Trump Coin for creating utility by allowing people to Trump merchandise while he's in office. That would be an interesting news story to cover. The other thing I would say is, like, going on what you were talking about, Stephen, about like sniping coins and things like that. I think what came out of the Malay, the Malay token, the Libra token, and that whole situation, call me naive, but like, until that and Trump and some of these other things, I didn't realize how institutionalized the sniping and back end of these meme coins was, and how much money people were using. And like, it was just a lot of it was very scammy, extremely scammy, I don't mind saying. So I think people seeing that has kind of driven down the interest in the space, because people realize, like, I think there was kind of this aura of like, oh, anyone can launch it and make money, and realize it's kind of like there's a lot of big, like, institutionalized people behind this that are like ripping retail off.
Yeah, I mean, there's a couple of services out there you can use where you can actually see the concentration of token holdings within like the top 1 or 10 wallets, and it's not unusual for 70% of the token to be held in just one wallet, and it's not advertised. So meme coins are very dangerous, and I think you're right, James, that like this was actually a good public example to show people how difficult it is to successfully trade meme coins.
Steve, you have any thoughts on meme coins? What, gambling, speculation, pure speculation?
I mean, it's hard to keep track, right? A couple of years ago, things such as Doge and Sheep, were meme coins, and today they are almost seen as somewhat, sort of
stores of value.
Exactly right. Towards the beta, right? It's all sort of relative, right? Isn't there a term in crypto land called lindiness, or it was how long a coin has been around? I mean, I am an economist, so I think of things in terms of equilibriums and how things will eventually settle down, right? I remember when the internet first came around, there was a thought that everybody was going to have their personal websites, and you're going to have tons and tons of different websites. But eventually, it just became Google, right? and a few other websites, like basically news aggregators and so on and so forth. Everyone is just visiting. Most people are just visiting a few websites, and then you have some other websites that get less and less traffic. It's very exponential. I suspect that this is what we're witnessing is going to be part of the journey towards something along that line, where ultimately there's just not that much attention to go around. The budget of attention is limited, and I imagine to the extent that you go beyond the sort of the top 5 coins that are going to be around forever for various base L1 utilities, you're just going to have people who are really famous being able to command that kind of attention. And that's what I speculate is going to happen. So,
interesting thoughts. Yeah, I mean, you could argue that everyone's Instagram and Facebook profiles are kind of like their own website, but it's like it's a sub token, almost kind of like these pump.fun tokens, but we don't need to go into there.
What makes Rock Wallet so special? Well, has the thought of your crypto being compromised ever kept you up at night? Yeah, us too. Rock Wallet is here to take that stress away. It's built with the security of your assets as the #1 priority. Rock Wallet is SOC2 compliant, FinCEN registered, uses 2-factor authentication, and the tools just keep getting better, with more upgrades coming in 2025. Right now, Rock Wallet is offering $75 in LTC for Unchained listeners to give Rock Wallet a try. Sign up and make your first trade by March 31st to qualify. Visit rockwallet.com/welcome/unchained to get started.
Hi, it's Matt Hogan, CIO of Bitwise Asset Management. Every week, I write a 5-minute memo exploring the biggest story in crypto. My goal is to give you an institutional investor's view on what's happening in the market. This week, I tackle the Trump administration's new plans to create a U.S. strategic crypto reserve and the market's tepid response to that news. The TLDR? The market is overthinking this. As imperfect as the proposed reserve is, it's long-term very bullish for the space. To find out why I think so, check out my memo at bitwiseinvestments.com/CIO memo. That's bitwiseinvestments.com/CIO memo.
Carefully consider the extreme risks associated with crypto before investing.
Before we get to macro and tariffs, I'll let Noelle into that. I just want to talk briefly about the ETF situation. So Coinbase launched Solana futures just recently. The CME Group, which is the primary TradFi futures market, is going to launch Solana futures on March 17th. So there's like a whole buildup here for all these altcoin ETFs we've talked about many times. One thing I do want to point out is there is a Solana ETF that theoretically could go live as early as March 12th. I don't know exactly it's a Solana futures ETF. So we could see a Solana futures ETF launch at some point in March, particularly if these CME futures go live on March 17th. There are no issues. The SEC allows them to launch the ETF. There's no guarantee this can happen. Unlike the spot products, we have like specific deadlines. In order to launch, the SEC needs to write an order saying that you're approved to go launch, right? So like all these things need to happen. With the way these futures products works, it's kind of like if the SEC doesn't stop you, you can launch one, which uniquely enough, last week, this is kind of getting a little off topic, but there's a private credit ETF that from State Street and Apollo. So anyone who follows TradFi, Apollo is like a private credit, private equity fund house company. And they basically taking illiquid private credit and putting it in an ETF wrapper. And they basically launched it because the SEC didn't really stop them. And then afterwards, the SEC was like, whoa, we still have questions. But this ETF is already trading. So just to give you an idea how this process works, I think some things might have gotten like lost in the shuffle and the new SEC admin changing over, the fact that we only have a couple SEC commissioners rather than the full set of 5. So I don't know exactly what happened there, but it's a very unique situation. That's just to give you the background of like what could happen with these futures products. We have XRP products that are listed here. There's a whole bunch of these other future products that are trying to launch. Will be interesting to watch over the coming weeks. But yeah, we could see some of these things launch before the end of the month. I don't know if anyone has any questions there.
Apart from the Solana futures, James, what other ones do you think we might see? What do you expect apart from the futures ones? Which do you think will be the next spot crypto ETF?
Oh, the next spot crypto ETF we think is going to be Litecoin, but we have a whole bunch that have been filed, right? So Cardano has everything that's in the potential, presidential crypto reserve has active spot filings with the SEC, and they've gone through the entire process. Most likely, I think Litecoin will be next. Something like Hedera is probably up there. Doge has been filed as well. Polkadot, ironically enough, which wasn't in the potential crypto reserve announcement, has also been filed. Hedera/HBAR, which I said already, and then XRP and Solana. But I think XRP, Solana, Cardano, part of the problem with why you can't really have an ETF is because they had those lawsuits out there. Most of these lawsuits have now been dropped that were calling those things securities. So I'm kind of curious to see how fast things can move. So we usually have this 240-day clock that starts. There's delays here. Honestly, what I'm most interested in seeing, what might come first, is actually these index-based products. So we have products that are already launched that hold Bitcoin and Ethereum, and they're filing from Franklin and Hashdex and Bitwise to like add other products to them. And then we also have a Grayscale product and a Bitwise product that are already index funds that are going to provide you exposure. Basically, I wouldn't be surprised if we see an ETF filing that says the U.S. crypto reserve ETF that's just going to hold the same coins. Like, don't hold out. I wouldn't put it past any issuer filing something like that.
Grayscale actually this morning they put out a tweet saying that I think that diversified product is like the only one they're trying to uplist it, and it includes all those tokens. So
yeah, GDLC, the Grayscale Digital Large Cap. So the final deadline for that is in July.
Yeah,
and of course we have to have a Made in America crypto ETF.
Go ahead, Stephen.
I was just going to say one thing, just going back to the White House thing, I forgot to mention. I really wonder if we're going to see a resolution to the Ripple suit before Friday. I mean, Cardano was mentioned as listed as an unregistered security in some of the suits against, I don't remember the exact words, Coinbase, Kraken, Binance, maybe in all of them, at least one of them. Ripple is one of the only tokens that actually was singled out. And I mean, it wouldn't be incredibly awkward if Brad is there with Trump and his SEC is still suing them, because I mean, that case has been going through the court system for years, but I really wonder, just for sort of like symbolism and for, I guess, showmanship, that it would somehow, we're going to get some news on that between Tuesday through Thursday. So that's not just hanging over everything.
The last ETF piece of news that I want to share before we get to macro, I'll let Noelle intro that. BlackRock has added IBIT to one of its model portfolios. Now, for those of you out there who don't know what a model portfolio is, a lot of issuers basically send out these model portfolios for advisors to track or investors to track. And they'll basically say, we're going to put, 15% in US large cap. We're going to put X amount in small cap. And they give you the ETFs to do this strategy. And we'll put this much in bonds, this much in gold, and this much in alternative investments, and these types of things, right? So it's basically a recipe to get exposure to the market that this issuer recommends. It's usually issuers. And the benefit is, one, the models are free, and they do it because if you follow their models, you're going to buy their ETF. So there's different ways to do this. One is you just follow it automatically. Once the model updates and changes, you can have systems set up that are automatically going to do what BlackRock recommends, what Fidelity recommends, what any issuer out there recommends. Everyone has these things out there. Even individualized companies offer model portfolios that just use, like, it might be like Joe Schmo in the Midwest who has an active equity model portfolio that trades between ETFs, things like that. So the thing is, you can either A, track it directly, B, you get it and you can choose to follow it exactly, or maybe make your own changes, or maybe you do want US large cap in that proportion, but you want to use a different ETF, things like that. So there's all different ways to do it. But there are hundreds of billions of dollars tracking these portfolios. The one that BlackRock changed is like a subset of their big portfolios. It's not like one that's really followed all that much, because it's specifically geared towards people who want alternatives in their portfolio. So what it is basically across the board, if you subscribe to their model portfolios where you have a specific goal of adding alternatives to your portfolio, now Bitcoin is automatically recommended at a 1% allocation. So it's a small subset of the model portfolios that BlackRock offers, and it's only a 1% allocation. So it's really not that much in the grand scheme of things. But from my point of view, it's kind of a big deal that they're starting to dip their toe in the water and recommend this in model portfolios. And I think they're going to take some time before they do it in the bigger ones, because as we kind of hinted at earlier, like, this whole space is a lightning rod. And honestly, what's going on right now with the Trump admin might make it even more of a lightning rod. It might anger some of their clients if they just automatically throw it into their largest portfolios. So I don't know if anyone has any questions or thought. Yeah, go ahead, Steve.
James, what's interesting is that earlier I mentioned that I had been a pretty long time skeptic of crypto And what made me more bullish on the long-term value of crypto was actually when I went out west and spoke with folks on the West Coast, sort of rich people, right? And I was talking to them about what they're invested in or whatever, and they would just casually mention, oh yeah, like I have some like equity of some VC, I have some like private investments, but I also have crypto, and I don't do too much of it, like 3 to 5%. That's 3 to 5%, but then the thing is, for them, I came to rationalize is that a lot of them made their money in venture, in their own business, or maybe they sold the company, or maybe they got shares from a tech company or whatever, that they're used to a certain level of risk taking, and they're willing to allocate to something. And there is almost a certain what in behavioral finance called availability bias, where if there's a lot of math to be done, you got to do a ton of math, right? That's why in TradFi, people fight over bips in fixed income. But when there's no math to be done, people just, oh, what the heck, 5%. So, there is no due diligence to be done on angel investing. So people allocate a certain amount. So that's how I came to view crypto as having, or Bitcoin as having values, because once, they managed to persuade BlackRock to basically make a allocation argument, you're going to basically see that a sizable portion of global liquidity or wealth being funneled through some sort of a proportional math, into crypto, which just by, right, that logic is going to give a value. Anyway, I just thought it's interesting that they started at 1 to 2%, but clearly see where this is all going.
Yeah, it's funny. I talk to a lot of people, like generally the recommendation is 1 to 2%. You might see somebody recommending 5%. And you talk to people making those recommendations, and often they're like, yeah, I have 25% of my net worth in Bitcoin or investable net worth, whatever you want to call it. Like I was on stage at the Bitcoin conference in Nashville interviewing a bunch of people from these issuers, Bitwise, VanEck, you name it. And Steve Van Eck, the founder of Van Eck, basically said at that time he had 30% of his like investments in Bitcoin. He was like, I'm a Bitcoiner at heart and all this stuff. And I was like, and meanwhile, they're out there, 1 to 2% allocation. It's just funny, like the people recommending it often like at least they're eating their own cooking in many regards. Go ahead, Noelle.
Well, one thing is personal risk. The other thing is career risk.
Yeah, that's a good point. It's one thing to lose your own money. It's another thing to pile your clients into a 30% allocation to something that goes down 80%.
Yeah. And never be able to work again. Yeah.
Well, I guess that's why Van Eck's Twitter account or X account's profile picture is a NFT.
Yeah, Hanji Penguin.
Oh, I do wonder how much that 30% where it started, because it clearly didn't start at 30%. I mean, may have started out at 1%, and then he held like many people in crypto that were smarter than I am 10 years ago. But yeah, it's interesting, and I'm really curious too. I mean, the research that BlackRock sort of put out that allocation for is sort of based on a paper that they published in December, looking at the risk profile of Bitcoin, and I think basically what they said was that I think like a 1 to 2% allocation, and they were very precise with the wording, because I wrote about this when I was at Forbes. It was something like, it offers the same level of portfolio risk as any of the Mag 7 companies, but as soon as you go above that amount, it just gets exponentially more risky. So that's where they came up with the 1 to 2% there. With everything happening right now with the market, and this maybe could be a segue into the macro part of the discussion, and the Mag 7 companies just sort of going down the toilet. We should all buy European defense stocks now. I'm curious, like, how that's going to change.
Yeah, speaking of which, that's a good segue into macro. And speaking of the defense stock, I was just looking at my screen now, and it is a sea of red except for 3 things. One is the German stock exchange, because defense spending. The other is gold, and the other is the VIX, which is shooting up. But we have everything else. Stocks are well down. We have bond yields. The 10-year is well down today. Oil is plunging because OPEC have announced that they're going to increase production as of April. Plus, there's some growth concerns in there as well. And crypto prices have not only lost the gains, I'm looking at Bitcoin and ETH as we speak, they've not only lost the gains they got yesterday after Trump's post, they are now below where they were before he sent that message. So there is risk off today in spades. Is arguably, I'd say it's one of the harshest days we've seen. And we should specify, we're recording this on Monday evening. Who knows where things will be by the time you're listening to this. But the growth concerns are getting real, and the economic data that we're starting to see are starting to confirm this. I mean, slowing consumption, the PCE data we got on Friday showed that inflation-adjusted consumer spending fell 0.5% in January. That was the highest monthly decline in almost 4 years. Today, we got February manufacturing PMI that showed new orders. The new orders index went into contraction. And a couple of weeks ago, we got a preliminary read on the services PMI. We get the final figure later on this week, but the preliminary read had the services activity index going into contraction. The first time in, to be honest, I can't remember when, but that's unusual. Services have been driving most of the economic growth for the past year, couple of years at least. And the biggest shock came from the Federal Reserve Atlanta's GDP Now model, which it takes all of the economic data, puts into a model, and spits out a prediction, not a forecast, a prediction of quarterly GDP growth. On Friday morning, that stood at expecting growth of 2.3%. 2 weeks ago, it was at 3.2%. Now it's 2.3%. Friday afternoon, once the trade information had come out, the goods trade balance, it plunged to a loss, expected negative growth of 1.5% for Q1 in the US. And we thought with today's information, maybe it'll recover a bit, but no, it has plunged even further. And now the Atlanta Fed is expecting GDP growth for the first quarter for the United States of America to be a negative 2.8%. And this is quite alarming. Obviously, this is a noisy figure, but I have never seen this kind of a plunge in the GDP expectations coming from the Atlanta Fed. Typically, they are more accurate than consensus economics forecasts. So it'll adjust. It'll probably not be minus 2.8 by the time we're talking again next week. But this is startling. It's being adjusted lower largely because of consumption, and largely because of the trade situation, which itself could be temporary, given that people are bringing forwards imports, given tariffs uncertainty. But given what Trump has announced on tariffs today, that we are indeed going ahead with 25% tariffs on Canada and Mexico starting tomorrow, 10% on Canadian energy, and then doubling the Chinese tariffs from 10% to 20%. Uncertainty is going to be on the table for some time to come. He's already hinting about more measures coming forth. Beginning of April, we should see reciprocal tariffs on everyone, apparently, unless there's some wiggle room there. The uncertainty is not going to be great for consumption. It's not going to be great for the trade figures, and it's certainly not going to be great for the margins of the companies that have been making most of the, justifying most of the stock market gains for the past year and a half. So things are looking a bit dicey. The metric to keep an eye on is the 10-year yield. This is something that that's the one that I'm most focusing on. It's also what Treasury Secretary and President Trump himself are focusing on, because the 10-year yield being uncomfortably high has been one of the biggest brakes on consumption, much more so than Federal Reserve monetary policy. That coming down should ease some of the pressure on consumer credit rates for mortgages, for car loans, etc. That's the one to watch. The dollar is coming down also, which will ease some of the global liquidity pressures. So we have playing out some very negative forces, especially the growth concerns for the US. And we do have some positive forces, as in things might start to look better outside of the US, not just from the defense spending, but from the easing of the DXY dollar index.
Noelle, could I ask you a question about the 10-year yield? The New York Times had an interesting article today. It was something like Donald Trump's favorite interest rate is going down, but not for reasons that he wanted. And the argument they made was that it was coming down just because people are piling into bonds because of all the uncertainty. So I guess someone who follows this stuff very closely, like, how do you is there a way to figure out like what is actually feeding into that drop, or is it maybe too far out or too noisy?
I do love that question because it gives me a chance to point out that with economics, it's always noisy. There's always so much going in there. Jim Bianco, who we had on this show not long ago, he was writing this weekend about how he thought that the drop in the 10-year yield, because the price is going higher, but that's largely because people expect there to be less issuance going forward if indeed we get Europe to pay for its own defense. In other words, he thinks it's a supply issue, not a demand issue. And there may be some of that in there. I personally am more convinced by the demand issue that investors are rushing into the 10-year because it is seen as a safe haven in this uncertain market. But there's no doubt some of both narratives at play here. I mean, it's just the consumption story, the slowdown of consumption story is compelling.
It's interesting. Coming into the Trump election back in December, I had already expected the 10-year to come down. In fact, I had a bet with my boss at work that we're going to see, the 10-year actually come down to, close to 4 by the end of last year. And then at the end of last year, we made a renewed bet that was surely going to be under 4.5 by the end of January. Neither came to pass. But my rationale for the time was always that I thought the run-up in 10-year yield and the growth expectations as well as growth optimism, among, everybody who had gotten all giddy about another Trump term was entirely unjustified, right? That there was a lot of projection and hopefulness people have projected onto Trump because he had presented himself as a blank canvas as to anything goes, right? You ask him, he would tell you, I'll do that, right? So same thing with crypto. Crypto, people had projected so much hope, right, onto Trump's friendliness towards the crypto space. So my thought was that once eventually this was going to wear off, once people remembered that it was not going to be easy for him to do any of the things that he had promised, that it was going to take effort, and he was also not exactly the most sort of organized person when it comes to doing things that he's gonna get a little sort of haphazard. So in my opinion, what we're witnessing is not even necessarily the bearishness with respect to the economy that we're going to enter a recession, which we may well if current trend persists. But I do think a lot of what we are witnessing should have been expected. That once the inauguration happened, reality sets in, and then sort of you already priced in all the good stuff, the high mean. Now you're pricing in the high variance. The high variance is that, like for example, earlier today we were chatting about why the market dumped today, even though we had known about tariffs for such a long time, is because Trump does these things so haphazardly that after the last minute, you never really quite know whether he's actually going to go through with it for real or not. The last couple of times, he sort of yanked at the last minute and said, oh, by the way, never mind. They called me and there was a good phone call. And easily had a good phone call today, and he didn't. So, I mean, it's hard for me to take a lot of this seriously. I mean, looking at the Atlanta Fed nowcast, I'm just looking at Bloomberg's Pico models, a dashboard where we show not just the Atlanta Fed's nowcast, but also the New York Fed's nowcast as well as Bloomberg's own. And it seems to me that while the Atlanta Fed's one plunged, the other two are quite stable. And historically, those two have also been more stable. I think the reason is because the New York Times one uses more of a moving average. New York Fed. Whereas Atlantis, they sort of let the newest data influence, the forecast, a bit more. So, remains to be seen as Noelle, or you just said, but I suspect in a couple of weeks, we're going to see a bounce back.
Yeah, I agree. I do think we'll see a bounce back. Another interesting point about the dropping 10-year yield is that this is happening at a time inflation expectations are shooting up. The Conference Board released their latest consumer survey, I think it was on Friday, and expectations from the survey for inflation 12 months out, 1 year away, 6%. Now, the University of Michigan was, I think it was the previous week, that is not quite as high, but inflation expectations for 5 to 10 years out hit 3.5% in the University of Michigan survey for the first time since 1995. So inflation expectations are not exactly anchored, as Chair Powell likes to say, but we are seeing the 10-year yield dropping. Intuitively, you would have expected the opposite.
Yeah, I think it just shows how much people are running to safety.
Yeah.
Because,
I mean, I went to Michigan, I love my alma mater, but I also suspect those expectations are wrong. As we have seen, I think someone did a decomposition, right? If you sort of decompose that
but Democrat and Republican, right?
all right, Democrats' expectations for if inflation went way up and Republicans went way down, right? Is a flip.
Republicans almost had zero, which makes no sense whatsoever.
Sorry?
Republican expectation of inflation 12 months out at zero almost,
Exactly,
which
which is why I'm having trouble taking either the median or the mean of that expectation series very seriously. I am looking at the inflation swaps, and they seem fairly stable. I mean, and like inching up a little bit, but bobbling mostly. It is very interesting to me that on this podcast where we talk mostly about crypto, that people do pay a lot of attention to macro, which of course has to do with the fact that a lot of crypto is driven by liquidity, or at least the perception thereof. I do wonder if at some point we're going to see a divergence and decoupling of crypto as an asset class from simply a high beta version of Qs. What do you think?
I get this question a lot. I was actually giving a talk about this precise issue the other day, and my answer is no, we're not going to see a decoupling because crypto will always be a risk asset for some traders. It is a high beta. It has the right volatility. It will always be that, no matter what other narratives are going on. And crypto prices are what the last trade reflects. And so short-term traders, those that tend to churn more, in other words, those that do see it as a risk asset, they're generally going to be the price setters. However, crypto, and Bitcoin, let's narrow it down. Bitcoin is also a store of value for many. That is the narrative that BlackRock is, and many others are pushing, for instance. And for many others, as you were hinting at earlier, Steve, it's a new technology. That's why you have so many of the California crowd involved. So Bitcoin has many narratives, and it will always go with whatever narrative happens to be top of the pile on a given day. But that changes according to priorities, moods, and events. So that's one of the things that gives Bitcoin a higher floor than other assets would have, because it's not just one thing. There will always be someone stepping in when Bitcoin drops because of risk concerns, because they see it as a store of value and now it's more affordable. Just as if the store of value narrative should wane, there are many other reasons to buy it. That gives Bitcoin a higher floor than many other assets can enjoy.
And I would also say, if this year is an indication of what you just said, I don't know what is, because theoretically, if you think it's trading on the idiosyncrasies of crypto as a whole, and Bitcoin specifically, or maybe Bitcoin less, but crypto as a whole, I mean, every headline this year has been like tremendous. If you had told me a year ago about the headlines about these drop lawsuits, the SEC meeting a crypto task force, all these different things happening, I could literally list like 40. I'd be like, oh my God, that's so bullish for the space. And it's been the exact opposite for the space this year. Like the price is just tanking, broadly speaking. Obviously, we've had some rallies. It's volatile. It's a volatile asset class, but it's not really. It's trading more like the risk assets are. And the other thing I would say, going back to what you were talking about with the European versus U.S. markets, it's funny. Like if you look at on the Bloomberg terminal, I have these monitors, and like one of them is the World Equity Indices, and it's broken out by like Americas, EMEA, and Asia Pacific. Every single index in the Americas is red today. Every single index in Europe, EMEA, is green today, with the DAX, the German index you mentioned before, up the most, up over 2.6%. Asia is a little more mixed, but mostly flat. Gold is up. So again, it's just like there's very different things. And I think a lot of it has to do with like Ram has been on this podcast saying like Trump's election was like 100 bips of cutting because of like the euphoria that people felt, because I think it has to do with Steve Howe, what he was just saying. Everyone thought Trump was going to do everything for everyone, and everyone was just bullish inflation expectations or like growth expectations. I think that's kind of unwinding right now. I mean, if you look at the US equity markets, we just did a podcast, which Steve has been on actually, about like the case for Europe. And the case for Europe was kind of like the last like few months people were talking about Europe because like it really couldn't get any worse. Like the way that risk markets trade specific equities is like expectations. Like, how do you expect the earnings to be? And the expectations for the U.S. market towards the end of last year got insane. Like it was going to be extremely, extremely hard for the U.S. market to do well. One of the reasons it did so well the last few years is because everyone was worried about all these inflation issues, all these things, and it basically climbed a wall of worry. Whereas Europe basically had no expectations, and all of a sudden earnings are showing up. We're starting to see those German defense stocks pop up. And if the Eurozone, actually starts investing in their own defense and printing money and doing different things, you couldn't end up with a situation where they're like actually piling in, and there's been no expectations for this year for Europe because everyone's just so beat up that you end up finally getting some money getting allocated to Europe from around the world. So there's this unique dichotomy where
I do want to
crypto is
switch
just
that point here. I want to hear what Stephen thinks. I heard over the weekend. I was listening to these Taiwanese geopolitical commentators talking about asset allocation globally. And they were talking about how over the last few years, because of global uncertainty, the Ukraine conflict, Middle East, and so on and so forth, it was just a lot of I think flight to safety, and people felt safer in the US, risk markets, right? Plus, of course, the general liquidity environment. Now, with the prospect of the war winding down in Ukraine, if it does wind down, you can have a more benign global, geopolitical environment, in which case people are under-allocated to Europe, people are under-allocated to China, and you can actually see a flight of risk capital out of the US towards those geographies. Curious, what, Steve, you said at the outset you didn't think at all there was any chance of the war winding down.
Oh, I might have been a little bit tongue-in-cheek there. I mean, clearly, I hope that the war winds down because it's just been a tragedy frankly, it's just a massive tragedy. A lot depends on exactly how the war winds down. Like, is there going to be a ceasefire? How sustainable is it? What type of security guarantees is Ukraine actually going to get? Because I remember, you guys probably do too. I remember when Russia invaded Crimea in 2014. It's just sort of like, I'm not sure what the word is for that type of territory, but it was like 80 or 90% native Russians. These are people that were part of Ukraine but really wanted to be Russia, and then there were peace accords, and Putin ran over them when he invaded Ukraine again. And who knows what's going to happen with all that. And then the real question related to Taiwan is what's going to happen if and when China attempts reunification, perhaps by force. The U.S. has always been, I don't want to get too much in the weeds here, but the U.S. has always maintained sort of a stance of strategic ambiguity, where we've never actually said if we would come to the defense of Taiwan in the event that China invaded. I know Biden actually kind of...
I was going to say Biden actually did that once.
I think most people probably... any of his predecessors had, but even still, like the official policy is strategic ambiguity, and God knows, we are much more tied up to the Taiwanese economy because of semiconductor chips than we are to Ukraine. Ukraine, from an economic point of view, is more of a European problem than this one. So, frankly, I think if a lot depends on that's the next flashpoint to look towards, and just because of how big a presence we have in Asia. And just that it's been a goal of China to do this for so long. And if they feel that if and when the Ukrainian conflict ends and it's done in a way that is advantageous to Russia, people in Beijing, they're going to clearly think that now is the time, because if why would, the thought process would be, why would Trump encourage the U.S. to go defend an island that most Americans probably have never heard of, let alone could pick out on a map? And if that happens, then who knows? It's I get the idea of rolling in.
You see, it's hard to envision, but I for the longest time always thought the one value proposition for crypto was exactly a world in which we return to a pre-World War II kind of a spheres of influence, full segmentation of kind of Yalta 1.0, right? Where Trump basically just sees Ukraine to Russia and sees Taiwan to China and say, you guys have it, and you have your backyard, I'll have mine. And, everyone just operates in their own backyard. And, you have segmentation of global financial systems, and they're interoperated by crypto.
I guess that's one way to look at it. from my point of view, the idea of like great power rivalries and sort of like this anarchic nature of international relations, and this kind of gets into all the theory I did in grad school, and sort of the decline of like of American liberalism, and I, that type of world has not always been very sustainable. And the idea that Bitcoin is sort of this like supernatural or supranational currency that kind of floats amidst this like world of walled off gardens. I don't know. I mean, I don't think that's good for anyone, although perhaps we're going that way. I mean, just looking at like the rise of nationalism across the globe. I mean, Trump's not alone in that. So it will be interesting. It will be interesting to see. One thing I would quickly add, though, just going back to the previous conversation about how uncorrelated Bitcoin is. I mean, I agree with what you said, Noelle and James. I mean, as it becomes more institutionalized, it's going to remain highly correlated. I actually looked at the last few times that Bitcoin kind of decoupled from the rest of the market, and few and far between. I mean, in November of 2022, the market was going down already, but then when FTX collapsed, the bottom just fell out of crypto, and the rest of the market kind of kept going. And then on the flip side, when all the good news came out about the Bitcoin ETFs, like when Grayscale won that decision against the SEC, and then when the listings were approved and then they finally started, I mean, those were very much sort of like endogenous, like bullish crypto scenarios. I don't know what the next one's going to be. I mean, we maybe sort of had one with the announcement of this reserve, but people were kind of disappointed in it. Maybe if we get more details, we'll know something about it. But other than that, I mean, I'm curious maybe what everyone else thinks. Like, what would be the next big sort of event that would be isolated to crypto that could cause it to move in its own direction, up or down, compared to the rest of the market?
I was writing about this the other day. I get asked a lot, what's the catalyst? What's the catalyst? And my catalyst is just sellers get exhausted. It's not an event. We've seen events themselves may have a short-term blip, but not a sustainable one. What's the sustainable blip what's the sustainable move that's going to get the next leg of the bull run going? Sellers getting exhausted. And we need new money to come in. We are seeing that. We're seeing new money come in through the ETFs, through the other acquisitions from large institutions. We know this is happening, but there are still sellers that are offloading and taking profits. When they are exhausted, then there isn't a lot of available supply for the new buyers to accumulate, and that's when the run starts. Bull runs are always, always, always driven by new money coming in. And right now, the new money is coming in, but at a trickle, and it is being met with selling. When it starts to come in with more enthusiasm and the sellers aren't there, we're going to start to see some sharper moves, which will bring in more money, and that's when it really gets going. But I don't think it's going to be an event. I think it's going to be that we just reached that inflection point in the cycle.
I honestly would have thought the crypto reserve thing was going to be such a shock, like if we hadn't had the tariff news, I wonder if it would have been such an orthogonal, uniquely beneficial news to crypto, especially if it creates a snowballing effect, which I'm not sure it's going to, but let's say Saudi Arabia also announces its own, crypto reserve, not out of the realm of possibility, right? You could get into a situation where it starts to acquire its own dynamics. But that's just a theory.
Yeah, that's the game theory, right? Playing out. But I think part of the problem is like Trump issued that tweet, and it's still not very clear. We talked about this at the beginning, like how would this video to happen, when it would happen. Like he's just saying he wants it to happen, which granted he has done a lot for this space in general. He's kind of done a lot of his promises made, promises kept type things, but like it's not very clear how he's even going to do this. But
and any nation state accumulating, if they're intelligent, they wouldn't tell anyone until it's done.
Yeah, and even Cynthia Lummis talked about this. A state will probably do it first. I mean, I'm surprised Wyoming wasn't the one to do it, but there's a whole bunch of states trying to do it. Maybe they don't get through in this pass, but I think it's more likely that a state will do it before the federal government necessarily. But time will tell, I guess. We went a little long. We have a whole bunch of other topics that we wanted to get to, but we didn't really get to. Let's wrap up with this one. Bank of America CEO Brian Moynihan basically said that they were going to launch their own stablecoin, which I found fascinating because in my mind, stablecoins, as we discussed in the show many, many times, they are one of the definitive use cases for blockchain. It's the first real use case of, real world asset tokenization, putting dollars in the blockchain. It's interesting that Bank of America sees this. I don't know if you guys have any more complex thoughts than that before we wrap up.
I've been looking into this. I keep that because stable coins are, the product market fit of the crypto industry for now. It doesn't make a lot of sense. There are going to be a lot of bank stable coins, but it's not a great business model for the banks because right now the stable coins are going to compete with deposits. And the thing about deposits is they can then lend them out, which is where they make their money, right? They can't do that with stable coins, one presumes, because they're going to, we can assume, depending on the rules, be one for one backed. So again, it's going to be competing with its own business. So I don't really see the point. And stablecoins obviously are a much better deal for the user than our tokenized deposits. Maybe that's what he was talking about. Tokenized deposits are simply a token representation of bank deposits. And you then have to do the deposit and ledger adjustment in the background once you've moved the stablecoins around. And they are of limited utility within the walled gardens. Maybe that's what he's talking about. That makes a lot of sense. We know JP Morgan, for instance, have been doing really good business on theirs. Others are going to be following suit. But that's a very different type of asset than a stable coin. So I don't know what he's thinking of there. We're going to see a flood of stablecoins. We know that. There are already new issuers appearing almost every week. But for banks, this is a shift in their business model.
For me, I mean, I think what he's thinking about is the number of 13 billion, which I'm sure we all know what that means. That's Tether's, unverified profit from last year. In many ways, I mean, there's no better business model than running a stable coin at scale. You basically get deposits, you pay no interest on them, and you can invest them in treasuries. I get your point, Noelle, that like it kind of could cannibalize deposits. Maybe my sense is that like B of A or anyone else who tries this might try to use it as a way to bring in additional money that doesn't compete with deposits, and perhaps even as a customer acquisition tool that then they could try to get users of Bank of America coin or whatever to open up banking accounts and credit card accounts and so on and so forth. But it's just, I mean, the business model, if you can run a stable coin, is so lucrative. It would just like it'd be almost in some ways like unconscionable to not at least kick the tires on it. The real trick, though, is figuring out how to do this in a way that you get that scale. I mean, PayPal, I forget how long ago it was, a year ago, 2 years ago, they launched their stable coin. They haven't reached, I don't think they've reached $1 billion yet in market cap. And Tether is 100 something. I don't even know what it is in circles at like 55 billion. I mean, no one's really come close to unseating either one of those. Paolo Arduino, CEO of Tether, said that if he told me in an interview a couple of years ago, like he knows that he actually thought he would get dwarfed by like a JPM coin or B of A coin or something like that because of the scale of those banks, and he wasn't so worried about it because he always felt that Tether was more for international users, not US. But you just look at the profits for Tether, which is the most profitable company in all of crypto. And their business model is so simple. If there are clear rules, I would think every bank would at least take a crack at it and see if they can find the mix that works.
Steve, you have any thoughts before I throw mine in a little more?
I know absolutely nothing about this, but what Noelle said made a lot of sense to me. This sounds like to me is just a competition and cannibalization of deposits, which large banks of all institutions, get away with, for paying nothing. So why would they now provide an instrument that actually pays, interests?
Yeah, I would say two things. One, I mean, right now Tether isn't paying anything. The problem is it's just, again, like you said, it's not a cheap source of capital. They can't really do anything theoretically. They just have to hold the assets, but they get to keep the interest. They don't have to pay anything out. But in many Bank of America, I should have looked up what the actual standard savings account is, but it's probably a couple basis points, maybe like 10 basis points at the most. So it already is like free capital for them. This is kind of their business model. But what I would say is, one, this jumped out to me because Bank of America hasn't been involved in like any of these conversations I've heard in the crypto front. Like I've heard JP Morgan doing stuff with blockchain despite Jamie Dimon not really being a huge fan of it, right? I've heard Citigroup getting involved. US Bank wants to custody this stuff. Like there's all these other banks that have been, kind of circling around the space. I hadn't really heard much from Bank of America. I mean, I know last I checked, like most of the platforms like Merrill, which is part of Bank of America, can't even hold any of these crypto assets. So it's interesting to me. But from my like world of ETFs, what I think of this might be is kind of like cannibalization makes sense, but like at the same time, Noelle, it might be kind of a thing we need to get our like dip our toe in the water, understand this, get involved, because it might be better for them to cannibalize themselves than to get eaten by somebody else. So what a lot of ETF issuers will do is they'll launch competing products that are cheaper and better than their own products that are legacy that make them a lot of money, but they would rather cannibalize their own selves than let somebody else come in and take their own market share. So I think this is just like they need to get involved to like know what's going on because stablecoins are coming.
Yeah, that makes a lot of sense. And what excited me about seeing that report was the idea that we're going to be seeing large banks experiment with DeFi services. Perhaps not right away, but by next year, I really think we're going to be seeing that, and they're going to need stablecoins for that.
Be very interesting. Brave new world. All right, anyone else have any final thoughts before we wrap up?
It's going to be an interesting week. So much to talk about. There always is.
Yeah, I mean, we didn't really mention specific. I don't know if Noelle said it in her thing, but like there are also going to be agricultural tariffs that are going into effect in the beginning of April. So I mean,
I think
there's all these
the opportunities to talk about tariffs. This is going to be a theme. This is his favorite word after all, or his fourth favorite word or whatever.
And yes, crypto is risk asset. Bitcoin behaves like a risk asset today, it for sure is. But gold is going up, and that will reflect on the Bitcoin narratives at some stage.
Yeah, I mean, one thing I will say is like Biden was almost like completely out of the public eye for like a lot of his administration. And like Trump is the exact opposite in that he's like the headline of the news every single day. It feels like every day he's in the news. And it's kind of like, I mean, me personally as an American, like ideally, I'd like it to be like somewhere more in the middle. But it's kind of tiring. It's exhausting. It really is exhausting. I mean, today he was like, maybe we'll keep upping those tariffs 10, 20, 50%. Who knows how high it could go? I saw him talking. I was like, oh my gosh.
I went through my files this weekend. Since the beginning of the year, since the inauguration, since the beginning of the year, let's go for that. We've had one weekend without a major breaking drama in crypto. One weekend.
Yeah. Tiring. Well, it gives us a lot of stuff to talk about every week. So there's that.
For sure.
All right. Thank you for joining us for this episode of Bits and Bips. We'll be back in 1 week to discuss more about how the worlds of crypto and macro are colliding. Till then, everyone.